Hi, Assalamualaikum warahmatullahi wabarakatuh to our panel, Puan Zuraidah Sipon and Cik Nurulashikin Abu Bakar. Welcome to our Voice Voucher presentation, and today we are representing company Rubberex Corporation and Berhad. So, our team consists of 6 members, which I am Haqiem Jaafar, the group leader for this project.
I am Mashitah Binti Muslim.
I am Muhammad Ahmad Shafan bin Irwan Zamachari.
And I am Muhammad Hajraiman bin Juaizi.
Hi, my name is Muhammad Akmal bin Abdul Aziz.
I am Binti Muhammad Fazli.
Okay, for this chapter consists of 3 parts, which are financial analysis, risk and statistical analysis, and technical analysis. I will pass the first section to Ms. Mashitah and Ms. Kamarina.
On this slide, we will be presenting about financial analysis. This part consists of analysis of balance sheet, analysis of profit or loss, horizontal analysis, and vertical analysis. On this slide, we will present about asset structure. On this slide, it consists of fixed asset and current asset. Based on the figure above, the highest total fixed asset amount by Rubberex Corporation Berhad is during 2017 with 213 million. The lowest total fixed asset of Rubberex Corporation Berhad is 96 million. For current asset, the highest total amount is also during 2017 with 199 million. Furthermore, the lowest total current asset of Rubberex Corporation Berhad is during 2019 with 137 million. On this slide, we will present about financial structure. This slide consists of current liabilities, long-term liabilities, and shareholders' equity. Based on the figure above, the highest total current liability is during 2017, which is 109 million. However, the lowest total current liabilities of Rubberex is during 2019, which is 63 million. Moreover, for long-term liabilities, the highest figure is in 2017, which is 26 million. The total long-term liabilities is very low compared to 2017 and 2018, which is only 1 million. Furthermore, the highest total shareholders' equity is during 2017, which is 276 million. Then the lowest shareholders' equity is in 2019 with 205 million. So moving on to the analysis of profit or loss statement, this slide consists of interest obligation. Based on the figure above, the highest interest paid was in 2017, which is negative 4.667 million for the year. However, the lowest was in 2019, which is negative 2.447 million for the year. The company managed to uplift their loss through the 3 years performances, since the company able to generate high revenue to cover up their interest paid. Based on the figure above, the highest interest received was in 2019, which is 849,000 for the year. Meanwhile, the lowest was in 2017, which is 132,000 for the year. The company tend to entertain a higher their interest received on 2019 performance, since the company had a well-managed interest received for their investment as stated in the company's statement profit or loss. So for the dividend distribution, based on the figure above, the highest dividend received was in 2019, which is 10.51 cent for the year. The company has managed to generate dividend received in a great value for 2019. Meanwhile, the lowest was in 2018, which is negative 20.65 cent for the year. This is because the company has improved its profit over the last 3 years with an annualized gain of 346% in 2019. In comparison, earning per share only gained 320% over the same period, and at a glance, the 578% gain in profit over the year impresses. Based on the figure above, the very best dividend paid was in 2019, which is 5.043 million for the year. The company has declared that the number of dividends paid increases throughout the years. Moreover, the all-time low was in 2017, which is 1.891 million for the year. The company was able to pay a complete of 0.018 cent per share, supporting the performance. The company encompasses a trailing yield of roughly 3.7% on its current stock price of 0.545 cent. The company paid out 25% of its free cash flow as dividends last year, which is conservatively low. Furthermore, it is encouraging to see the company has grown its earning rapidly, up to 89% a year for the past 5 years. In addition, earning per share also have been growing quickly since the company is paying out a relatively low percent of its profit and cash flow. Moving on to the next presenter.
So I will continue this video with the horizontal and vertical analysis presentation. For horizontal analysis, we compare the ratio of the company for the year 2017 to 2019. From this table, we can see the liquidity ratios and the leverage ratios. So for the liquidity ratios, we have current ratio and quick ratio. And as we know, from the table, we can see that the higher current ratio and quick ratio is from 2018, which is 2.961 times and 2.122 times respectively. So this shows that the company, which is Rubberex, are capable to pay their short-term obligations using their current asset. However, the lowest current ratio and quick ratio for these 3 years is during 2017, which is 1.818 times and 1.009 times respectively. These lowest liquidity ratios show probably due to the declining in trade and other receivables that happened in 2017. Next, we have leverage ratios. Here we can see the debt ratio and time interest earned. The highest debt ratio is during 2017, which is 30.34%. Based on annual report of Rubberex, during 2017, the new rules by European Union make the company face many debt financing. As we know, leverage ratio is a measure where the company is depending either too much to debt finance or not. Here we can see the highest debt ratio is during 2017, which indicates that in that year, the company depends too much debt financing. Next, we have time interest earned. The highest time interest earned is during 2019. This is because the large profit due to the event where the company entered into a conditional share sale agreement with Nutraceutical Biotech Global Holdings Limited. Time interest earned is a measure where the company's ability to honor its debt payment. Next, we have profitability ratios. In profitability ratios, we calculate 4 types of ratio, which is gross profit margin, net profit margin, return on asset, and return on equity. From the table, the lowest gross profit margin and net profit margin is during 2018. For gross profit margin that in 2018, it becomes the lowest, which is 41.70% because of the rising material costs and unfavorable foreign exchange rates in 2017. Next, for the net profit margin, the lowest is during 2018, which is 4.23%, which also due to the accounted for net foreign exchange losses of 7.7 million ringgit. However, for the return on asset and return on equity, the highest is during 2019, which is 4.21 times and 5.54% respectively. This is because during 2019, the profit after tax rose 31% from 11.4 million to 8.7 million. And besides, the event that happened in 2019 is the strong demand for gloves. So, at this critical period of health, safety and precautionary are paramount by the people. That's why the demand for gloves is really high during 2019. And for the activity ratio, we have inventory turnover. Here, the highest inventory turnover is during 2019, which is 2.79 times. This is because for the strong demand for gloves due to the existing of new pandemic, which is COVID-19, this disease increased the sales of gloves for the Rubberex. Next is for vertical analysis. Vertical analysis is where we compare the ratio for the Rubberex and the other competitors, which is comfort glove. So from this table, we actually compare the ratio for the year 2019. And for the liquidity ratios, we can see that the higher current ratio and quick ratio is from Rubberex, which is 2.182 times and 1.501 times respectively. This is because the proportion of total assets revealed that 76.0% funded by shareholders. This lead to the higher number of assets for Rubberex company during 2000. For the leverage ratio, we have debt ratio and time interest rate. However, the leverage ratio shows that the comfort gloves ratio is higher than Rubberex, 39%, 25 times respect. This is because the higher number of this ratio is because the increase in production and sales during 2019 comfort glove. It is require higher utilization of short-term financing facility. For the profitability ratios, we have 4 ratios just now, which is gross profit margin, net profit margin, return on asset, and return on equity. For gross profit margin and net profit margin, we can see here the Rubberex have a higher gross profit margin compared to comfort glove, which is 45.10%. This higher gross profit margin is because the lower cost of synthetic latex for the production of neutral disposable glove, which is increased the sales of Rubberex. However, for the net profit margin, the return on asset and the return on equity, the comfort glove dominate the ratio with the higher ratio compared to Rubberex. This ratio, the higher ratio, is due to the one-off logistic cost of 5.4 million and driven by the increase in sales revenue. It's also because increase in demand for synthetic premium specialty gloves in comfort gloves. This shows that the demand of gloves for comfort gloves is higher than Rubberex. And for the activity ratio, we can see that the inventory turnover for the comfort glove is higher than Rubberex. The low inventory turnover for Rubberex is maybe because the Rubberex is keep the inventory in high amount. Based on their annual report in 2019, it shows that Rubberex keep their 42 million of inventory and rarely restock their inventory during 2019. Now I will pass it to the next presenter.
For the risk and statistical analysis, it includes the risk analysis, regression analysis, company intrinsic value, and also the outcome from the analysis. Okay, based on the slide here, we can see the figure of the risk analysis for Rubberex, Comfort, and KLCI. The interpretation that we can make from this figure are the Rubberex represent the highest expected return because of Rubberex intend to become a significant role in the nitrate disposable glove segment. According to this situation, Rubberex has increased total installed annual capacity to 2.5 billion pieces of glove compared to the 1 billion pieces in 2019 production. The rank followed by KLCI and the lowest expected return are Comfort. For the variance, Rubberex also at the first place, followed by Comfort, and last one is the market, which KLCI. Okay, based on standard deviation, the highest risk turns to Rubberex, while the second one turns to Comfort, and the lowest risk represented by the KLCI. The CE measure the risk of stock per unit. It shows that Rubberex represent the highest risk, followed by Comfort, and the lowest risk turns to KLCI. Okay, these are the figure of regression analysis for Rubberex and Comfort. Okay, based on correlation coefficient, both companies shows a positive correlation with KLCI, and Comfort shows the stronger relationship than Rubberex. From the coefficient of determination, Comfort receives the greater impact than Rubberex. As the value of the R squared, Comfort is higher than Rubberex, which made Rubberex receive the least impact from the changes of KLCI. Moving on to alpha, Rubberex have a positive alpha with value of 1.1810, which indicate that this stock outperformed the KLCI index, while Comfort have a negative alpha with a value of negative 0.5684, which indicate the stock underperformed the KLCI index. This situation shows that Rubberex have a greater performance than Comfort, while beta shows Rubberex have a negative beta with value of negative 0.3524, which indicate negative movement with less volatility as the market, while Comfort shows a positive beta with value of 0.3493, which indicate the positive movement with less volatility as the market. The table of ANOVA, based on Rubberex ANOVA table, the p-value is 0.5926 because the value is less than our significant level of 0.7684. We reject the null hypothesis. Our sample data provides strong evidence to conclude that the two population mean are not equal. While for the Comfort ANOVA table, the p-value is 0.4375 because the value are more than our significant level of 3.3638. We accept the null hypothesis. Our sample data provides strong enough evidence to conclude that the two population mean are equal. Based on simple regression between Rubberex and KLCI, we can see here, based on data, it shows the simple regression, it shows the relation of variable X is written on Rubberex and Y is written on market. From the equation, it shows that x and y have a negative relationship in which every increase of x by 1% will decrease y by 1.1810%, while increases of y by 1% will decrease x by 0.3524%. Based on the data above, the correlation coefficient between Rubberex and KLCI are 0.1007%, which indicate the both variables have a positive direction with moderate relationship with market. While the correlation determination of R squared between Rubberex and KLCI are 1.01%, which means 1.01% of the total variation in Y can be explained by the regression line using the independent variable X, while another 98.99% can be explained by another factor, which not included in this model. The simple regression between Comfort and KLCI based on data above shows the simple regression between variable X returned on Comfort and also variable Y returned on market. From the equation, it shows that X and Y have a positive relationship in which every increases of X by 1% will increase Y by 0.5684%, while increases of Y by 1% will increase X by 0.3493%. Based on data above, the correlation coefficient between Comfort and KLCI are 0.2919%, which indicate that both variables have a positive direction with moderate relationship with market. While correlation determination R squared between Comfort and KLCI are 8.52%, which means 8.52% of total variation in Y can be explained by the regression line using the independent variable X, while another 91.848% can be explained by another factor which not included in this model. Okay, I will pass the present to another presenter.
Thank you, Haqiem. I'm going to present about the security market line. Referring to the chart, we have drawn a security market line and we have plotted our selected company, Rubberex, with the competitor, which is Comfort Gloves. The required rate of return for Rubberex is 2.0158% and for Comfort Gloves, it is 4.6127%. The line drawn on the chart serves as a representation of the capital asset pricing model that shows systematical risk or market risk that is plotted against the expected return. The expected return of Rubberex is 1.36% and the expected return for Comfort Glove it is negative 0.75%. It is obvious that Rubberex is overvalued as the expected return is lesser than the required rate of return, which is 2.0158%, as well as Comfort Gloves, which is also overvalued as the expected return is lesser than the required rate of return, which is 4.6127%. We can see that both of the company stock is not at the equilibrium point, and with the level of return, the risk should be low. Each stock is overvalued and therefore investor will plan to sell the stocks. Moving on to the intrinsic value, the dividend payout ratio for Rubberex is 0.002995 times and for Comfort Gloves is 0.00866128 times. We can see that the dividend payout ratio for Comfort Gloves is higher than Rubberex, and it shows that Comfort Gloves is returning more money in terms of dividend to their shareholder to compare with Rubberex. Next, retention rate. The retention rate for Rubberex is 99.7005% and for Comfort Gloves it is 99.1387%. In this case, Rubberex has a higher retention rate to compare with Comfort Gloves. Rubberex Corporation is likely using its cash internally to generate a higher rate of return, and Comfort Gloves is likely to focus on returning the money to their shareholder. Next is the return on assets. The return on asset for Rubberex is 0.009831 times and for Comfort Gloves it is 0.061298 times. Rubberex has a higher amount of return on asset and it indicates that Rubberex is better at managing their assets to generate revenue. Moving on to the dividend yield, which is for Rubberex it is 5.8310% and for Comfort Gloves it is 5.4076%. Rubberex has a higher dividend yield, and from this we can see that the amount of dividend that is paid by Rubberex is better than Comfort Gloves. Next is the current market price. The current market price for Rubberex is 0.54 ringgit, and for Comfort Gloves it is 0.79 ringgit. Comfort Gloves has a higher current market price to compare with Rubberex. Next is the price earning ratio. It shows that for Rubberex it is 0.05138 times, and for Comfort Gloves it is 0.15927 times, and it shows that trading Comfort Gloves is riskier than trading Rubberex. It is because it puts pressure on the company to do more to justify the higher valuation. Next is the expected earnings per share. For Rubberex, it is 10 ringgit and 51 cents, and for Comfort Gloves, it is 4 ringgit and 96 cents. For the expected earnings, Rubberex has a higher expected earning per share to compare with Comfort Gloves. And lastly, the intrinsic value. Rubberex has 200 million and 5, and Comfort Gloves has 277 million. Comfort Gloves has a higher book value to compare with Rubberex. That means that the investors are more attracted to invest towards Comfort Gloves. I pass to the next presenter.
For the last content in this video, I will present about technical analysis, which includes the comparative analysis, trend analysis, the indicators, and the analysis of indicator signal. I will talk about the comparative analysis. Okay, what is comparative analysis? Comparative analysis has been used to compare the selected company's price behavior with the behavior and movement of others. Comparative analysis help the investor to compare the performance between the company and its competitors. Okay, so basically comparative analysis which helps the investor to compare between the companies, and with comparative analysis can select and we can choose which company is better and which company have the better performance. Next, I will present about the comparative analysis. Okay, for the left side, it shows the comparison relationship between KLCI and Rubberex, and on the right side, it shows the comparison relationship between Rubberex and Comfort Glove Berhad. Okay, first I will talk about the left side, which is KLCI and Rubberex. Okay, for KLCI, KLCI hits downtrend on March 2020 since the Conditional Movement Control Order, which is CMCO, first phase has been implemented due to the COVID-19. As we know, during CMCO, all the business and market has been forced to shut down, which will lead to the downtrend in the market. And then for Rubberex, the price movement is starting to rise from May. And the reason is because due to COVID-19, where the demands for glove is increasing. Therefore, the sales for the glove will also increase, and which will increase the stock price in the graph. Okay, next for the right side, the comparison between Rubberex and Comfort Glove Berhad. Okay, so for Rubberex has the best profit growth prospect. This is due to Rubberex stock has maximized its volume until 117 million, contrasted with one of their competitors in glove sector, which is Comfort Glove Berhad, that only has 39 million for its volume. Okay, Rubberex Corporation Berhad also has a net profit that jumped 860% which is from 7 million to 71 million. The company revenue also increased from 168 million to 263 million. Therefore, the highest price Rubberex Corporation Berhad has achieved in 2020 is 3 ringgit and 59 cent. And then for Comfort Glove, which is its competitors, Comfort Glove net profit jumped by 551%, which is from 22 million to 150 million. The company's revenue also increased by 68.6%, which is from 372 million to 627 million. Therefore, the highest price for Comfort Glove in 2020 is 7 ringgit and 27 cent. Next, I will talk about the trend analysis. In this graph, it shows the stock price for Rubberex Corporation Berhad in 2020. In this graph also, it shows there are 3 resistance in the graph and 2 support. First, I will talk about the resistance. For the first resistance, which is resistance number 1, shows that if price increase to 2 ringgit and 3 cent, there will be a rejection at the area, and it shows that there are more sellers than buyers in the market. For the second resistance, as the price increased to area 2 ringgit and 16 cent, it struggles to rise higher. And last but not least, for the third resistance, resistance number 3, at the price of 3 ringgit, there is a price rejection and oversupply in the market. As the price reached 3 ringgit, the buyer struggles to push the price higher. And moving on for the support, the first support number 1 is marked at the 1 ringgit and 35 cent, which indicate that once the price is at the area of 1 ringgit and 35 cent, investors are willing to enter the market and buy the stock. And then for support number 2 is drawn at the price level 1 ringgit and 33 cent, which at this area price has come close but has never crossed below the line, and it shows that more investors are inclined to buy at this area. Then I will pass the presentation to the next presenter.
Thank you, Hazrik, for your explanation about the comparative analysis and the trend analysis. So moving on to the next part of the technical analysis, which is the indicator of Rubberex Corporation and Berhad. We have analyzed to the latest 3 years of the chart, which from 2018, 2019, and 2020 for the short-term analysis and the intermediate analysis. The indicators that has been used for the analysis, which is simple moving average SMA, moving average convergence divergence, MACD, relative strength index, RSI, Williams percent R, and the stochastic oscillator. This slide shows the 2080 indicate the stock price range shows in between 15 cent until 25 cent. The short-term analysis occurs to August until to September 2008. The SMA indicator shows the buy signal on early August, which the SMA line intercept with the bullish signal. The price has rising until the middle of the period and reversal trend occurs, which the price shows the bearish signal and the price started to falling down. For another 4 indicators, the bullish also occurs, but the RSI indicator and Williams percent R indicator show a signal appears earlier than the SMA indicator, while for the bearish signal also occurs on another 4 indicators. The intermediate line analysis occur from 30 January until 30 April 2018. They are drastically stock price falls down and the price bearish signal was occurs on the SMA line. The price will fall for the 2 months in that period and the SMA line started to show the bullish signal on early April. The price movement after the buy signal occurs a slowing down movement and the fluctuation are not obvious. It was indicating as a low buy signal that time. The bearish signal in another 4 indicators, the signal appears in uncertain times. The MACD bullish signal appears late and the Williams percent R appears earlier than the SMA indicator. The next slide shows 2090 indicator and the stock price was ranged in between 15 cent until 19 cent. We have decided the January 2019 period as the short-term analysis. On the indicator, it only shows the buy signal on January, which the price 0.156 cent, and as we can see, the price was moving slowly after the signal appears. And another 4 indicators also show the buy signal, which the MACD line intersect with the signal line, and for the stochastic oscillator indicates strong signal when the percent K line is above the percent D line. Moving on to the intermediate analysis on 2019, the SMA indicator show the signal line appears on 31 October with the intersection of SMA line at bearish candlestick, and on 70 December with intersection of SMA line and bullish candle indicates a buy signal. The MACD indicator shows the sell and the volume also falling down after the bearish signal occurs. For another indicator also show the sell signal in that year. Besides that, the buy signal started occur after the price drastically falling down. All the indicator also shows the buy signal, but on RSI indicator, it doesn't show any buy signal on the indicators. Moving on to the next slide. On this slide shows the 2020 indicator. The stop price range on that year in between 40 cent until 3.2 ringgit. On the short-term analysis, we have analyzed on 19 October until 19 November 2020. In the SMA indicator, it only shows the sell signal on the price facing downtrend, and the investors started to sell their stock at that time. While for another 4 indicators, they also show the sell signal. The MACD shows a selling signal where the MACD line crosses below the signal line, and the RSI indicator shows the RSI line above 70% and then move down and crosses over the overbought line. For the intermediate analysis, we have indicated the period in between July until September 2020. On the SMA indicator, the price has shows shows the buy signal and the price trend movement is on sideways. This trend has occurred when the forces of supply and demand are nearly equal. On the August, we can see there is a red arrow which represents selling signal for SMA. Selling signal occur when the closing price move below the SMA line. And another for indicators, they also show the buy signal. On the RSI indicator, there is an oversold situation where the price of a security has fallen between 13%. Then the price move out and crosses over the oversold line, which occur the buy signal. Moving on to the August, the indicator as sell signal. The rest indicator also show the same signal as well as SMA indicator. As we can see on the MACD indicator, there is an overbought situation where the price of a stock has risen above 17%. Then the price movement moves down and crosses over the overbought line, which occurs the selling signal. So, an analysis of indicator signal. We can forecast the action that need to be taken by the investor in order to get better return of their investment for the company. The chart showing more sell signal compared to buy signal, which indicates that during 2020, the share price for the company is not showing a good performance. According to the RHB investment bank Berhad, Rubberex Corporation and Berhad has bright prospect during 2021 due to the future factory expansion that obviously can attract the investor attention toward this stock. As a conclusion, the investors are being recommended to buy this stock from Rubberex Corporation and Berhad. It is because the indicator shows that the price chart has the probability crash during 2021. And the last slide is conclusion and recommendation of technical analysis. Rubberex Corporation and Berhad having a good competition with the Comfort Glove as a competitors. The company is moving forward toward their objective in achieving their business goal. According to the chart on the technical analysis, the investors are being recommended to buy the stock from Rubberex Corporation and Berhad. The price movement of Rubberex shares is likely to move upward and form a bullish market, especially during 2021. For the investor again, it will be able to buy this stock and for them to hold the stocks because there are high possibilities to descend to rest in the future. That's all for me. I will pass to Haqiem.
Okay, end of the presentation. I would like to thank Madam Suzana for teaching us for this semester, and also to my group members for giving full cooperation for this report, and also to the panel that willing to evaluate our assignment. Thank you for view our video. Goodbye. Have a nice day.